Welcome to another episode of the Weekly Crypto Check-In, recorded on July the 16th, 2025. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Good, Robert. Dog days of summer I find myself in. It's
Yeah.
humid and hot out here in Atlanta, but no, I'm doing well. How are you?
Yeah, I'm doing well. We were talking before we started here about normally I'm outside in the mornings trying to take advantage of the cooler weather. Today I did not go outside, and oddly enough, it was one of the cooler mornings, so I would have
Right.
really enjoyed that. But you're right; it's hot out. We need some rain, is what we need. It's
Yeah.
been rather dry here in Atlanta. So
Yeah. Well, it's been an interesting couple of weeks. I know we haven't recorded this cadence of kind of doing it twice a month or every other week has, allowed for headlines to percolate. And there's definitely been some developments on the legislative front and some interesting activity from an IPO perspective. So a lot of good things to cover today.
absolutely. So the first one is about an IPO, Grayscale, and those that have been listening for a while may recognize Grayscale's name. Before we had ETFs for Bitcoin and Ethereum, they were the company that had publicly traded private trust. And they converted that trust into the Bitcoin ETF. It is the ticker of that is GBTC.
Mm-hmm.
And they're known for high fees. So they're looking at going public. I've kind of view this more as a exit strategy for the founders than anything else, because I'm not quite sure how durable this business is with their high fees. So
Yeah, especially in a world where the some of the headlines that we didn't put in here talk about the success of BlackRock's ETF IBIL
exactly. Yep.
and how their fee model and the likes of these giant asset managers has been to reduce fees and make it so that everyday Americans and investors, retail investors, all the way up to institutions can buy just about any asset class now through an index ETF
hmm
for a few basis points a year. So, yeah, they're a little bit of an outlier and have been at the forefront of kind of converting these trusts into similar products, but their fees still are higher. They wouldn't be the first asset manager that would be publicly traded if that's how they end up sort of describing themselves as an asset manager.
Okay.
But a lot of these asset managers, that just are index providers, have much more scale and a much broader distribution, and live on the shelf, if you will, at a bank or an insurance company or
Mm.
a financial advisory platform, whereas Grayscale is not on that scale. So
Right.
yeah, like you said, it could be an exit for the insiders or for the owners to try to get liquidity, while crypto seems to have been recently riding a wave of enthusiasm.
Absolutely. It's I as a founder myself in the past, and I guess currently too, more power to Mike Norvitz, the founder of Grayscale. I personally don't like a lot of what he has to say, but I can respect the hustle that he's gone through. So it's I guess a mixed bag in this one for me. I guess from a personal perspective, but anyways, talking about asset managers, they don't get any bigger than Vanguard.
Right.
And So Vanguard this is ironic. So Vanguard does not allow account holders to invest in Bitcoin ETFs, Ethereum ETFs, anything crypto related,
Right. Right.
except with a big asterisk here, except for now that strategy, what used to be called MicroStrategy, now that they're in the S&P 500, the Vanguard ETF for that has to buy it effectively.
Right.
And now they're
They
the
have lots of index funds that
yeah,
track, an
different
own
things.
strategy. Right.
Yeah. So that now Vanguard is the largest single holder of MicroStrategy, which is just
Yeah.
highly ironic. Like,
Right. By default, they across all these different funds
mhm,
that they own and run, they're
mhm.
now a big institutional investor in strategy. So by default, their analysts and research teams have to cover the company, you
Right.
know. But
I
so
mean,
goes the index, so goes, the funds that they own. So
yeah,
that means a lot of Americans by default own MicroStrategy because they own Vanguard funds.
yeah. This is the bizarro world we live in these days. This is like not something that I necessarily would have thought was coming, but it makes total sense now that we talk about it. But it's a crazy world. And we one of the things we were talking about before we started recording was what do they have in common? Well, they really only have one thing in common. Vanguard and MicroStrategy both claim to be long-term investors. I think the similarities stop there, but but I guess maybe they do have some common ground if they ever need to talk to each other. So.
Yeah, well, one thing about these bigger institutional investors is when it comes to corporate governance and proxies and their annual meetings is because of the size of their ownership stake in these companies,
Mhm.
if they see something that they want to change or they want to have influence on, they're certainly generally as a management team that's receptive to hearing
Right.
opinions. They don't always follow them clearly, but given the magnitude of ownership that Vanguard has and obviously their sway, uh, they're certainly, would think there would be at least a lot more coverage of what strategy is doing within Vanguard going forward. So yeah, the ironies, certainly
Mhm.
are out there for sure to look at here.
Yeah. The So I don't know if this is, I guess, the spirit of irony. Our third topic is the Genius Act. There's voting that's been procedural voting that has failed and has passed. I actually have come to believe, I had this theory that representatives that are elected to Congress feel like they have to create drama to validate that they have the position that they're in, because everything seems to have drama around. I don't care if it's crypto related or not. And maybe this is just the divisive world we live in, but so the procedural vote that was happening for the Genius Act. The Genius Act is the stablecoin bill that has already passed the Senate. Now it's in, trying to work its way through the House.
Hmm.
As of, I believe, Monday, had failed. That vote failed. There was some Freedom Caucus Republicans that voted against it, which all of a sudden didn't allow it to have enough votes to kind of move forward. That has since been cleaned up in literally 20 minutes before we started recording today on Wednesday here. It did pass. So I think the Freedom Caucus was worried that there was not some rules or clarity around the anti CBD part that they want to have in the bill. So basically saying the US can't have a CBDC. And I'm assuming that got cleaned up or they got persuaded in some way. But here we are. So the procedural vote now, I think it comes up for floor discussion, and then it could proceed on to a more of a final vote potentially. And then, assuming it passes, then it's on to President Trump's desk. So.
Well, and if there was ever a time to tune in, pardon, to C-SPAN, it would be to hear,
Yeah.
older Americans, with white hair and suits
Mhm.
on, trying to talk about crypto. No, I'm digressing, but it'd be interesting to see if it did come to hearings or a committee to hear kind of how far politicians have come on this
Mhm.
issue over the last couple of years. But it also comes at a time when David Sachs, the crypto AI czar
Mhm.
for President Trump, and the crypto task force, are they also preparing to issue their first report here? Is it
Yeah.
next week?
Um,
I
this
think
week,
it's before the end of July.
yeah, it's sometime soon. And the White House, I believe, is the one that started this terminology, but they're calling
Yeah,
this Crypto Week in DC. I don't know if
yeah,
it's the industry helped start that or the White House did, but Trump even tweeted about crypto yesterday or Monday.
yeah.
So it's
Yeah, I'm pretty sure
we're
that the
close.
the task force report is coming out, and
Mhm.
so and it could be this week, and then maybe that is consistent with this being Crypto Week in DC. But that will obviously grab some headlines because that was a lot of folks in the industry and obviously on Capitol Hill that were collectively coming together to try to put together, if you will, a framework for this
Right.
industry from the standpoint of what do we need to get it, you know, moving forward and further embedded
Mhm.
in the economy, within the regulatory bodies, et cetera. So yeah, there are folks working in the summer, contrary to
Yeah.
to popular belief.
Totally. It's but it's even 2 months ago, I was not terribly optimistic that we would be moving as fast along as we are with these
Yeah.
bills. Stablecoin is the easier of the two. The market structure bill, which will be the second one that comes through the Senate, in the committees, are starting to work on that. Maybe by September, there's markup and that's voted on. But it's going to be by the end of September. but we we're getting closer, and it actually starting to feel a little more real than it's ever felt. So
Well, it's sort of like the old euphemism. People overestimate what you can get done in the short term, and they underestimate what you can get done in the long run. And I think
yeah.
when President Trump was obviously elected into office, and they sort of sweep into power, controlling both houses of Congress narrowly, but
Mhm.
obviously the executive branch as well. And everybody was super optimistic coming from the crypto and digital asset and blockchain um, equation, and
Mhm.
industry was like, we're going to see all this stuff in the first 90 days. And there was a flurry of things, but ultimately it felt like in kind of the spring, it was like, ugh, right? And we
Right.
all like had to wake up to the reality. There's actually bigger things going on in the world, right? Um, we saw what was going on in the Middle East, and just flare-ups between continued things with
Mhm.
Russia and the Ukraine, and it's just like a lot of stuff I felt like kind of took and needed to take. It did take a back seat, and then it's like here we find ourselves like kind of plodding along in June, July, and there's actually stuff that's happening.
Mhm.
The capital markets have opened back up a little bit, right? We
Yeah.
saw and talked about that on our last episode. We're now seeing, Grayscale and
Mhm.
um, other companies talking about an IPO. So there is more happening, and obviously there's more headlines to go. But yeah, I mean, I think in the long run we might underestimate, at the end of the day, like
Yeah.
how much gets done in 2025 when we get to December.
Yeah, and a bit of also from the perspective of like it seems to be a priority. Like
Yeah,
it like because if you look at it from the perspective of these 12 Republicans that voted against it on Monday, Trump brought them into the Oval Office on Tuesday, had a discussion with them. There
yeah,
was absolutely no chance that if a year ago the Democrats are trying to do this, that President Biden would have had them in the
yeah.
office talking about crypto. This is not going to happen.
No, yeah, it would not have been a priority.
Yeah.
Yeah,
So it's just, may go by as something that's not important and missed, but I think that's pretty important. The capital markets are going to quickly change in the order of a couple of years here, likely, and it'll be interesting to kind of watch it unfold.
yeah, no doubt about it. And there's also just a super active crypto lobby now, right?
Mhm.
And a lot of conversations, and obviously there's a huge effort and undertaking going on behind the scenes with elected officials, at all levels, and that lobby is meaningful and powerful. And clearly, there's a lot more interest now at stake, right, between the asset management industry, the banks.
Right.
There's a lot more players that are probably at the table in those conversations to make sure that their voice is heard, which we'll cover here in a bit.
Yeah, and I think maybe just from the perspective of the crypto industry spent so much money on the last election. We got the people in there. We just need to follow through, get them to follow through. So it's like you don't
Yeah.
want that those funds to go to waste. So with the whole lobbying effort that I'm sure is happening behind the scenes. So, anyways, we can move on here. Still staying in politics. So there's it's not yet signed, but there's an executive order that's being circulated around that Trump is likely to sign that would open up 401ks to private markets. Um, be a
Yeah.
big deal.
It would be. I mean, this was one that like you added in, and I had read about this early in the week, and the notion would be that in your 401k today at most companies, you're able to select from a handful of traditional asset management companies. We talked about Vanguard, BlackRock,
Hmm.
Wellington, ING, American Funds, right? Household names, Dodge and Cox, and these large traditional asset managers have historically kind of dominated. Fidelity have dominated the 401k market, and individuals with a 401k have really had to pick from those
Hmm.
handful of managers. And to really be in a 401k plan, there's a significant amount of compliance and regulatory reporting, and large asset managers are best positioned, historically have been best positioned to do that. Well, one thing you couldn't really do in a 401k is you couldn't invest in the private economy. You couldn't invest in private equity. You couldn't invest in crypto. You couldn't invest in real estate, traditional private equity real estate. And so obviously there are, you know, very, very large and now publicly traded asset managers out there, Blackstone, KKR, Ares, Apollo, just to name a few, that are obviously lining up probably and spending a lot of time in DC to say this is now the time in which we ought to be able to participate and Americans ought to be able to participate. The irony is when you look at the pension plans across America, a lot of the defined benefit pension plans for teachers and firefighters and you know um, lots of different unions have been investing in the private markets for decades, and they've
Right.
had access to some of these very big asset managers and their strategies for years.
Hmm.
And this isn't the show to talk about performance and get into that, but the point is, um, Americans that have worked at firms that offer 401ks hadn't, and so this would be a very very massive change to the 401k market, and would obviously open the floodgates. And you would think that crypto would want to participate as well.
Right.
So it'll be really interesting to see. You hate to think the idea of a 401k getting loaded up in a bunch of crypto, just like it would be scary if they loaded it up in a bunch of private equity,
Right.
right? But the reality is there's going to be some guardrails in place.
Sure.
What you hope is that that people have choice, and
Mhm.
that you're not forced to only buy one crypto fund or from one crypto asset
Yeah.
manager.
But
So we'll see.
BlackRock's going to offer three different ETF, and those are your choices.
You know where I was going with this, right? So yeah, so
Yeah.
we'll see. But yeah, it's going to be something to watch to see if President Trump signs this order, and then what that actually means is, do
Mhm.
companies go forward and actually start looking for private managers, to be a
Mhm.
part of their 401ks?
Right.
There's lots of different layers to this, but certainly something to watch.
Yeah, and, I think you alluded to it. Assuming this happens, I imagine the guardrails are that they're going to cap the percentage of your 401k that can be in private, to keep
Yeah,
people from just kind of going
yeah,
crazy with it. So,
right, right.
anyways, we will probably have more news on that sometime soon. So,
Hmm.
so our next one is banks are now allowed to custody crypto. I did not think this was a 2025 thing. I'll be honest, even with the positive environment that we have around crypto, but it's a as of yesterday, the Fed, the FDIC, and the OCC came together, put out a document basically giving banks the all clear, and basically gave them the rules of the road. Part of those rules that I think are the most important are banks will be dealing with the private keys of a blockchain wallet for whatever networks their client has assets, and if those private keys get compromised, the banks are liable. So it'll be interesting to see how this gets added into. I would assume it's like the brokerage side of the house, not necessarily the bank side of the house, and like how they deal with custody, how they charge for it, because it's not zero cost right now. We'll probably get there over the long term, but right now it does have an expense. So
Yeah, and so I guess the questions I would have would be, what size of banks are going to make, a toehold here in terms of offering custody
mhm,
services of crypto assets? Are you going to have traditional assets there before they'll accept your crypto assets?
right,
Is there a certain minimum? Because crypto comes with a lot of implications, right? Around keys and security. There's a lot
mhm,
more, you just read about a lot more attempted hacks or hacks outright of crypto than you do people's stocks
mm,
or
right,
people's real estate, right? So
mhm.
it's going to open up a lot more questions to follow. But obviously, again, something you said earlier in the recording, like just a big change from where we would have been 6 and 12 months ago.
Yeah, just the difference in nature of the technologies, right? Like if
Yeah.
somebody doesn't steal socks because it's no longer paper certificates, it's electronic records, and if
Hmm.
somebody stole it, they're going to be able to figure out who did it and unwind that. The nature of blockchain is you don't unwind these things,
Hmm.
so that if something is stolen, it's gone. You potentially try to trap it somewhere else, but it's not necessarily. There's no like return to sender. Um, Option. So I don't know. It's again, it was a surprise, good surprise, and we seem to be getting kind of these random things. This being one of them, happening kind of once a month, once or a couple times a quarter, in a positive direction for crypto. And again, we're going to look back maybe a year from now, be like, wow, look where we came from, and in such a short period of time. So.
Yeah. Agreed. Agreed.
Um, so our next one is on Visa. So Visa is launching their own crypto network. Um, I'm not surprised about this. Visa's been doing a lot of testing for years. They didn't make a huge big fanfare about it, but they would talk about different pilots that they were running and different things. In this case, Visa, the network that they run now processes, I've heard, like 25,000 transactions a second type situation, a lot. So it's a tremendous amount of data, and admittedly, they have to get it right, or they got a really big problem. And they're trying to leverage stablecoins in this. I was kind of reading an executive summary that I had AI write for me of this massive PDF, and it was cool to kind of see like how they're approaching it. They're going to be using their own network, so it's not a true public blockchain. It is a blockchain, but a private one, and they'll be doing settlement. It sounds like with stablecoins and fiat. I believe this is like not even step one. This is half a step into using crypto, in my opinion, and they're just going to kind of take their time and be cautious about it.
You know, uh, just yesterday, I was trying to do a payment out of my financial institution to a vendor.
Mhm.
And believe it or not, the vendor, you know, a small business in Florida, you know, that banks with Chase, and I won't name my bank, but they have a big, traditional money center bank.
Hmm.
I'm using more of a super regional bank, let's call them.
Okay.
And I can't, they give me their instructions to receive payment. So
Hmm.
as the payee, they give me their routing number, their ACH, blah, blah, blah. I go into my bank and I just want to send them,
Hmm.
pay an invoice, a few $1,000 invoice. And because of the size of their company, I guess my institution determined that they're through the merchant services network that my bank has, that I'm not able to pay them electronically. I can only I can only pay them with a traditional check,
Which
right?
makes no sense whatsoever. Like,
And so I
yeah.
send the check by July the 7th. I requested it to be processed to pay an invoice. And here we are, July 15th yesterday, and I call my bank and I said, I don't believe this payee has received the funds. They're telling me they haven't received the check. Can you look
Mhm.
into it? And 2 hours later, we had to stop the check. Can't find it. Nobody knows what happened. Everybody's pointing a finger, the bank saying the US Post. And I just said, "Okay, stop the check." I had to tell the guys, and they're very understanding, and they're like, "We're gonna see on our end if we can, go another route." But it made me really think, like, number 1, there's probably some fintechs out there that offer a better, ACH, payment solution than a traditional bank. But it
Mhm.
just really made me realize, like, with all the fees and all the layers and all the legacy systems, like,
Yep.
these financial institutions have to innovate and they have to really, be willing to make the financial commitments in the technology and the infrastructure. Otherwise, customers, in my small, business, medium-sized business, like in my deposit, I mean, we're going somewhere else.
Right.
'Cause it's just unbelievable that you can't literally pay a vendor today, like, as a business customer without, in this case, like, without, anything other than a physical check. I mean, come on.
Yeah. It makes you scratch your head. Recently, I was
I
helping
can't,
my
it's
dad.
hard to imagine.
Yeah, I was helping my dad recently. He sold his house. He moved and buying elsewhere and wiring the funds out. Like he banks with Chase. I will never bank with Chase after the experience I've had with him, um, because they treated him like he was a criminal. Like, and then like he doesn't have a bank in his town, so we have to drive 45 minutes to go to a Chase bank. They make it easy there, but then the back office is the boogeyman, and like they just never wanted to believe anything. It was a nightmare. That took like a week and a half to figure out.
Well, and then we're on the whole other spectrum, like with a wealth management firm, we're trying to close a multi-million dollar transaction, and there's a $42 million wire that was sent from the UK.
Hmm.
I they were trying to send it to a bank in Nashville, Tennessee, a fairly large bank, Pinnacle Bank,
Yeah.
and Pinnacle uses a correspondent bank called Wells Fargo. I think we've all heard of Wells Fargo. There are international types of wires like this.
Yep.
Wells Fargo has more of an infrastructure and they will accept the funds. They've got to go through compliance processes on their end, and then the money goes to
Hmm.
Pinnacle, right? And yet it's been 30 days and this wire is caught up. And, then you find out today, like somebody wants like 1% to do all this AML and compliance. And I'm like, that's $90,000.
Right.
like, to do your job.
Yeah.
And
Exactly. Yeah.
I mean, it's just, and so I just think we'll look back on this time and we'll realize, there's going to be those that are left behind because customers ultimately will move on and vote, with their feet, as a boss used to tell me.
Yeah.
So, but it's
So
it's still out there.
yeah, and this is, I think, a great segue to our next topic because big banks. So you got your J.P. Morgan, you got your Citi, you got your B of A, and you got your Wells Fargo. Those are the four big correspondent
Yeah,
banks
yeah,
in the
yeah,
U.S. They see the writing on the wall that this technology is about to change things. All of a sudden, they're very interested in issuing stablecoins because then stablecoins, literally in your scenario, the person sending the funds from, I believe you said the UK,
yeah,
literally could have gone onto a crypto exchange over there, bought stablecoins, sent it across the network, and literally everyone would be happy and it would be in their account within 24 hours. And the slow part there is the settlement from, say, Coinbase into the Pinnacle Bank part.
yeah.
Um, so it's coming quick. But the my favorite quote about this whole big banks issuing stablecoins part is Jamie Dimon. He has been anti-Bitcoin, anti-crypto for the longest time.
Yes.
He's used every way to describe how much he hates it. But he says J.P. Morgan will be entering the stablecoin space to understand it and to be good at it. Okay, first of all, they've been doing so much work behind the scenes; they're ready to go. We've been
Yeah,
to a conference and we've heard them talk.
yeah.
But yeah, as Citi and B of A make similar moves, it would be interesting to kind of see how they kind of go about this because you end up with unless they all start to use the same stablecoin, which is not going to happen because they don't trust each other. You're going to end up with this fragmented liquidity with all across all these different stablecoins. In a world where that happens, you start to need a crypto network to kind of balance it all out and kind of do it between. So that is one of the visions of the XRP ledger and what Ripple's been trying to do. So that part I find interesting. But the B of A during their earnings call this morning, Brian Moynihan was asked
Money
about
hand, yeah.
stablecoins, and he said, "Yes, we're ready to do it. We're going to be using outside vendors to help us, outside stablecoin vendors." To do it, and Ripple is like the biggest one that we know of that's likely been helping. So, I think this is going to change very quickly for all these guys. How it trickles down to the consumer and how long that takes will be interesting, but to see how long that actually how much time that takes to elapse. So,
Yeah, you'd think it would start with larger, even though the dollar amounts are larger, like, I feel like it's gonna start with larger, chunkier,
mhm.
more controlled movements of funds effectively, before it makes its way to retail where, you know, there's just a lot more headline risk. And I think the testing, I would think it's, obviously, like you said, it's been years in the making. So it's just
Yeah.
a matter of, it could be a matter of months, but it can't be more than a few years before I just feel like settlement and sending payment and sending funds is going to look dramatically
Mhm.
different for consumers as well.
Yeah, absolutely. I just quickly looked up. So Tether is $160 billion market cap, and USDC is 63. So call it 122 billion. That's chump change. like,
Yeah.
when we start talking about the scale that these other guys work at. So the market caps of either these stable coins or other ones pop up on the scene are quickly going to become big numbers. And I think obviously crypto may grow along with that just generally, but it's be interesting to watch. So our last topic is more so to highlight that more is going on in crypto than just stablecoins and
Mhm.
bills in Congress. So Ripple is working with a startup out of Dubai, and they're working to. And I realized I spelled Dubai wrong there in our little slides, but they are working to get all property deeds in Dubai on a blockchain, the XRP ledger in this case, and this is cool. I mean, this is going to allow things to enable fractional ownership, transparency. You potentially could use this in an easier way to do collateral for, a loan that you may want to take out. And I just, the world that we talked about these what ifs years ago, a lot of these what ifs are starting to come true, which is pretty cool. So,
Yeah, the real world use cases. I remember we had that conversation multiple times with, prospective investors
yeah.
around just some of the things that, Teton was doing and the application. And I felt like we were at times, looking deeper into, whether it was, foreign markets or there were use cases that were commercial, but the commercial everyday relevance for the person listening, they just maybe didn't see themselves there in terms of, oh, it's going to be used in international shipping and receiving,
Hmm.
and transport of goods and materials. Now we're seeing it, in things like real estate and other real world assets that people can identify with every single day. So, but we have seen it largely initially developing in Asia, and in Europe first.
Yep.
But it is good to see, given the headlines we've talked about here on this show over the last, year or so, especially in the last 6 months, momentum is picking up here. And I think the one thing that people can often say about the U.S. is it's a pretty resilient economy, and quite clearly is one of the most innovative economies. Sometimes just not the fastest.
Agreed. Agreed. Well, I think that we'll do a wrap for it. Thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.